There is blind justice, and then there is trading justice, so that you can finally afford to get that laser eye surgery. Not only will people find you more attractive once you ditch those old glasses, you'll be able to see your charts better. That's what we call win-win. Speaking of winning, it's time for a little trading justice. Brought to you by TackleTrading.com.
Welcome out to the Trading Justice Podcast. Tim, I believe this is episode number 53 of the podcast. And before we get started here, my little baby girl, Katira, wants to say something to everybody. Say something. What do you want to say?
Merry Christmas.
You got to say it loud so they can hear.
Merry Christmas.
And may the
Force
Pips
be with you.
Nope. May the pips be with you.
Oh.
There you go, kitty
May the
cat.
pips be with you.
Love
Well,
it.
Matt,
Love it.
yeah, 53 episodes.
Yeah,
Quite a
we
run
got-
so far.
hold on,
I think
hold on.
2014 was a good starter
Hold
year
on.
for us, but we've got big things planned for 2015,
Absolutely,
and I'm
we do.
excited to talk about those later in the podcast. But Katira, Merry Christmas to you, sweetheart. I
Hey,
hope your dad spoiled you rotten.
Oh, absolutely. We spoil her rotten. Hey, Tim, how's my audio coming in? Is it coming in okay?
Little bit light. You can probably just scoot up to the mic a little bit,
All right, sounds good.
or turn up your gain.
There we go.
Just
Turned up
there.
the gain. Should be okay now. Moo wants to say something.
Merry Christmas and Happy Hanukkah.
You know why they want Hanukkah, Tim?
Hanukkah.
Seriously. They want Hanukkah because they
Hanukkah.
think they get 12 Christmases.
It doesn't work that way, my dear.
I try to
It
explain
doesn't
that
work
to
that
them.
way.
They do not care about that.
Happy holidays to you, Moo, and it was nice to see you guys last night. Matt, we both got some pretty amazing
Yeah, we
families.
do.
And this
I
time of
get
year does make you remember the things that are important, the people in your life, your friends, your family,
Hey.
your colleagues. You gotta embrace them, and it was good to see you guys yesterday. That was really cool. Downtown Salt Lake
Absolutely.
and watching the Christmas lights. If you've never been to Salt Lake City, there's a very famous place called Temple Square where the Mormon temple is, and they do that place up right, Matt.
It was beautiful. No doubt about it. I mean, it was just gorgeous. I think they have 2.8 million lights up there and hanging out and walking through, and it was absolutely a wonderful time. Then we had dinner at the Bohemian. That was good. Nice little German food there. So, yeah, I'm looking forward to this, though. I mean, looking back, 53 episodes of the podcast here. It's been an absolutely amazing ride, and we'll get into kind of a look back here and look back at 2014 and lessons learned and whatnot. We definitely want to take all of your questions and type of looking back in 2014, what you guys learned, and kind of looking forward to what we expect in 2015. Tim, what's the first thing on your mind though? What do you want to talk about here?
Well, the first thing I want to do is anybody listening back on the actual podcast, just to set the stage, we've got 11 people here live in our Adobe meeting window that we're recording from. And these are some of our loyal members. I'm looking down the list. These are all our people right here, Matt. And so
Yes.
we will be getting some questions from them. If any of you guys have microphones, we can turn your mic on and bring you in and have you say hello and ask you a question live if you want to do that. We had Edgardo in a minute ago. We'll do that here in just a few minutes. But the number one thing, Matt, that I'm looking at, and I talked about this the other day in the coaches show, is this time of year is a good chance to look back, but also look forward. That's why I love it.
Yeah.
You can look back and see what you did well, see what you can correct, see what you can do better, and you got to look forward and start to plan out that next move. January is a time of resolutions. I'm not that big into the New Year's resolution thing. I'm sure we'll do another New Year's podcast, but it's a time of mental planning and rebirth almost to me. And you can set your goals. I'm already setting a lot of the goals for my businesses, my own personal growth, things I want to do in 2015.
Yeah.
And to me, that energy is a positive thing, saying these are the watermarks I want to hit. These are things I want to achieve. And so just kind of some internal thoughts with that myself. I'm also thinking about these markets. I believe that we're in a very interesting market condition lately. And with the advent of new currency, digital currency, Bitcoin, I just watched this really interesting video on Bitcoin just today. And also just the nature of where the US dollar is, the metals markets. There's some complex stuff going on out there that I think that we could definitely dive into and talk about. But in general, I'm just kind of hanging out and happy to be here. After the podcast, I get to go to family dinner, and my mother-in-law, we do the same meal every Christmas Eve, Matt.
Wow.
And it's a tradition, so yeah, I'm excited
literally
for that
like
too.
the exact same meal?
Exactly the same. It's Swiss steak, and it just started with her mom 30, 40 years ago. They've done it forever. If you don't know what Swiss steak is, basically you take, some pretty basic cuts of steak, and you put it in a crock pot with tomatoes and onions and broth, and it's really a simple meal, but you serve it over mashed potatoes, and it's really good.
That sounds fantastic, actually. I like it. You went pretty deep there. I mean, you had some internal thought going on.
Well, yeah. Are you just on the surface right now? You got nothing going on in that head of yours?
I'm completely surface driven right now. Completely 100%.
Simple.
There is
you got flashy new toys. You got a new computer. You got a brand new big monitor. Yeah.
I have no deep thoughts right now. Zero.
You're like a kid in a candy store.
I'm staring at my new monitors, and they're panorama, and I'm just thinking about
tell us
the
what you
things I can
bought.
do.
What do you got? You got some fancy new toys
I
there.
do.
What are you working with?
Well, you know what? As a trader, an educator, product development, everything, one screen doesn't work out very well, and maybe I just wanted to upgrade. But I got a new computer. It's from Easy Trading Computers. They build specific trading computers, high-end computers, and I don't know what it's called. It's a monster, though. It looks like it could come alive and be a transformer is what it looks like. They got me 3 27-inch monitors, panorama, and I'm just thinking about the things I can do here.
Yeah.
Fantastic.
Yeah, I mean, I don't go as crazy as some of these traders. I've seen traders setups with 8 monitors, 10 monitors. I've seen the big, digital TV on the wall, and then you got your personal monitors. I always can pretty much work with 2.
Yeah,
I bring my laptop,
good.
hook it up to another monitor, and I work from that. That's, and I have a lot of different spaces I trade in. Even at my house, I got monitors set up all over the place, just little, like Dell monitors, 22 inches or whatever they are. And I just move around. So, I do like the fancy stuff, but the desktop is, that's old school. But I just bought a new desktop as well.
Yeah, I know. I saw that downtown. It looked good. You got to have a good setup that you're comfortable in. I mean, we work as a trader. We basically work from home, and again, you got to have a setup that you're comfortable with. And I just, whenever I have to pull up my laptop and just work from my laptop, I can't stand it. I always feel like I have to connect a second monitor out there. But people don't want to hear us talk about monitors and computers. Let's talk about kind of your take on the market in 2014, Tim. Obviously a lot of up and down, not exactly 2013. 2013 was a straightforward, very easy market, directional market. 2014 is going to end with a gain, obviously. A lot of that gain happened in the last couple months, but at the same time, it is going to end with a gain, up a couple, 2-3%, the Russell, up 7, 8, 9, 10% in the other indexes, but it's going to show a gain. Even though it was volatile, what is the number one thing that really you learned new about the market in 2014 that you didn't know prior to this year?
Oh, that's an interesting question. I think that there are several things that have sparked my attention. Number one is that volatility patterns can radically change from year to year. Mm-hmm. It's something I already knew, but it was just reinforced even further. We've gone into a market. I remember when we started trading, you would basically see 6 days up, 3 days down. It was a swing market. It was like a ball bouncing down the road. You would get upward movement and pullbacks, and it would be back and forth. And so traders who were wanting to trade both directions, they could find opportunities. Now, even in this market, you still can find opportunities up and down. Look at the oil sector. Look at some of the weakness in biotech just the other day, all that kind of stuff. But it's more volatile in fewer instances. The month of October really jumped out at me.
Yeah.
Okay. The recent pullback really jumped out at me. And so when markets sell, they're selling sharp, quick, And then when they rally, they might rally for 4 or 6 weeks. I watch market statistics quite a bit, and some of the rallies we've had, Matt, in terms of days in a row up,
historical,
number of days, historical rallies. And so when the bulls are in charge, they really do push. And then when you do get the volatility come in, it's sharp and quick. And
well, I know, but you got to think about kind of what is driving that. That's something that is not new completely, but it's increasingly getting more popular. Is in 2014 we've seen how dominant high frequency trading systems can be, and that's one of the reasons why you're seeing these cycles in the market just change. Is because you're right. 25 years ago, the cycle was 10 up, 5 down. Now 5 years ago, the cycle was 6, 7 up, 2, 3 down. Now the cycle is 25 up and a crash down in 4 days. And a lot of it, these new cycles, and we don't know exactly what the cycle is yet, but these new cycles, they are longer term up in terms of movement, but the quicker turn down. You're still seeing the 50% retracements. You're still seeing the 38% retracements. It's just not done in half the time it took to get up. It's done in a tenth of the time it did to go up. I look at this recent pullback. It went up, literally, Tim, it went up about 22 straight days, either up or doji. And then when it pulled back in 3 days, in terms of 50% retracements. And a lot of that is based on these high frequency trading systems, because a lot of them are technical based, indicator based, average cycle based. And so when they just drive until they get a sell signal, they're just going to continue to drive it up, even if it's not that much. And so I think the one thing that I noticed in 2014 more than anything else is that the cycle in the market is changing. And I honestly do not think we know exactly what the next cycle is. I do not think we know exactly how these are going to work. It's just that it's quick. It takes a longer term up and quicker term down. And the question I have coming into 2015 is, how is that cycle, how is this new technology that the high frequency trading systems are using, how is that going to impact the longer term cycles in the market? Because short-term cycles are obviously different today than they were even 2, 3, 4, 5 years ago, let alone 10, 20 years ago. But how is these high-frequency trading systems, these technical systems, how are they going to impact the long-term macro cycles, which have been very, very consistent for 60, 70 years now, in terms of 5 to 5.5 years up and then 2.5 years down. Now are we looking at something's going to be like 6 years up and 6 months down? Is it still going to stay in the 7-year cycle range, but the down is very quick and the up takes longer? That's the one thing I don't know, and it's the one thing that's pulling, that's kind of, making long-term projections very, very difficult, given the fact that the high-frequency trading systems are shifting the short-term cycles. And since this is the first long-term cycle we've kind of dealt with, we don't know how that's going to impact that long-term cycle.
Yeah. I think it's one of the most important questions to ask, and quite frankly, it does feel like uncharted territory, because we're used to, and you study markets, you look back at the history, you think about cycles, and there's some great data over at the National Bureau of Economic Research, nber.org. It's a nonprofit kind of user-driven site by economists, and they talk about these cycles, and there's a lot of history around it, and I don't think it would shock anybody to see some downward pressure, but frankly, it doesn't feel like that's what's in the cards. The high-frequency trading stuff is a completely different angle, though. It's a new animal that we have not really had to deal with. And I know this is a small thing, and I don't want to say this lightly, but like the Sony hack recently, to me, made me think about markets, not about that movie. Not about somebody's email.
I do want to see that
hackers
movie now.
Get in,
great marketing, by the way.
I want to see it as well.
I think
Are they going to release it, by the way?
I think they paid North Korea to do this. I do. I think it was a wonderful marketing plan.
Well, I'm a conspiracy guy. I don't even know if it was North Korea. It might have been
probably
Sony
themselves. Sony did it by themselves. Yeah, I could see Sony doing that, by the way.
Don't you think that there could be some real risk to the exchanges, to the
I
to
honestly,
that kind of deal?
you know what, Tim, and I've said this
Cyber
before.
terrorism, that kind of stuff?
Yeah, I think there could. I mean, if we can see Sony getting hacked, and if people can break into the NSA, and you can have Bitcoin get hacked in terms of the Mt. Gox a year ago, could a bunch of hackers from Pakistan, break into Thinkorswim? Maybe. Thank goodness it's FDIC insured, though. So it's not something. I'll just say it like this: it's not something I'm worried about. It's not something I'm scared about. Our entire world, Tim, is our financial world is online. I mean, I just don't know how that could impact just one individual. I think if that ever happened, I don't know. I guess it's the same thing I don't worry about with Bitcoin. I don't worry about if I get hacked on Bitcoin. I don't worry about if my bank gets robbed, and I don't worry about if Thinkorswim gets hacked into. I just don't worry about these types of things. I mean, number one, it's things that I can't do anything about. Number one, it's not like the threat of technology or hackers is going to stop me from trading.
No, that's right. No, of course not. And it's not going to stop you from being a human being. You got to move forward no matter what. No matter how complicated the potential environment you're in that environment, right?
Mm-hmm.
I mean, we're looking at metals prices at yearly, multi-year lows. We're looking at the advent of new currencies. We're looking at complicated international relations. I say bring it all on.
We're looking at a change in...
Grab life by the horns.
Yeah, well, I think you should embrace it. Technology and whatnot obviously has benefits, it has negatives to it. But I think we should embrace all of it. I think we should embrace high-frequency trading systems because it doesn't matter what we think of them personally. They're not going away. I mean, you have to embrace it or you don't trade. So, to me, how have they changed the long-term cycles? Coming back to that a little bit, I honestly think there's no doubt that the market will eventually go down. If it's 6 months from now, a year, 2 years from now, 3 years from now, nobody knows for certain. But when it does, it's going to be fast. And that's why you have to constantly do your daily routines. You got to constantly watch the market and we're just seeing this with short-term cycles. I mean, they're faster down now, and they're slower up. So, I mean, it's just a matter of being patient, waiting for the right setup, and going out and hitting it. But it's just something that I feel has fundamentally shifted the way we trade. Is technology and whatnot. And that's a good thing, Tim. I mean, you think about it. 10, 15 years ago, selling a bull put spread got you what? 8, 10% ROI on 20, 25 deltas. Now you sell those credit spreads, you get 18, 20% ROI.
Right.
In terms of swing trades, what took, 10 days, 10 years ago takes 3, 4, 5 days today. So whatever negative there is out there, there's an inherent very good positive regarding the trading perspective.
Well, and it does make me think about moving forward. You look at 2015, Matt. I want you to think about something here. With interest rates possibly going up from the Fed, and we can. Is it possible we could have a carry trade where you're long dollar, short, say Swiss franc or something like that?
Long dollar, short Swiss franc, long dollar, short Japanese yen. Yeah, I mean, absolutely. I mean, how many times in our history have we been able to, buy the dollar and get a positive interest rate? That doesn't happen. I mean, it just doesn't, but now it is.
Common.
I mean, now the Swiss are going to a negative interest rate. The Japanese are doing their damnedest to go to a negative interest rate. If you see, it's not going to be a big difference, but I mean, just getting paid to carry a dollar in a strong environment. I mean, Lord Almighty, everybody in the world, every bank in the world would do that.
Sure.
So,
and I do want to just do a quick drop right here. You guys are listening to the Trading Justice podcast presented by TackleTrading.com. We're here on Christmas Eve just to kind of enjoy ourselves and say hello and kind of give back some of our time back to you guys, our listeners. We really do appreciate you. I want to tell you that. Matt and I talk about it all the time. We love being able to come on and rant about the markets and give our perspective, and hopefully you guys are learning something from our take on this crazy world that we live in. One thing, Matt, that I'm thinking about moving forward in 2015 is, what are some of the areas I want to improve upon? Where do I want to add to my trading, repertoire and arsenal or toolbox or whatever you want to call it?
Let's talk about that.
I think one thing, the automated trading, I would love to do some more testing and designing on my own systems, whether it's in the futures market or the Forex market, and start to build those things out, network with programmers and coders and start to expand that. But now that's me. I've been trading 10 years. Not everybody may not be there right now. And I'd say the other thing is I want to expand my mindset and my network to beyond trading a little bit, invest. It's something I did in 2014, more into the physical metals markets, more into Bitcoin. I don't think the market and being a trader or an investor or an entrepreneur should just be limited to trading stocks and options. And so that's another area I'm trying to target myself. What about you?
Looking into 2015, 2014 was probably, from a business perspective, one of the best years you and I have ever had. Given the fact that, we finally built the brand that we've been wanting to build forever. Literally forever. Tackle trading was a creation of 10 years, that we finally got around to. And, our contracts aligned, so to speak, because we were limited in doing that for a very long time. But we finally got around to building a brand that, wanted to basically embrace everybody, give everybody a chance to learn how to trade and learn how to, make money and start learning how to protect their portfolios and whatnot, not just for the elite out there, so to speak. So that was such an amazing thing. But, looking at that, growing tackle trading in 2015, that's obviously something that we're dedicated to. But at the same time, from an investor perspective, from a trader perspective, most of my focus coming into 2014 will be, on the currency market, not only trading the currency market, but perfecting my own internal system in terms of trading currencies. I've been trading currencies for 4 years now, but, even after that, even after thousands and thousands of trades, I still find things that I'm doing that aren't high probability, that are, not working. And I gotta really kind of, work out the things that are working, work out the things that aren't. Because, I was looking back at some of my trades in the currency market over the last, just the last 2 months. And if I could have cut out, and I had a great 2 months, Tim. Lord Almighty, I had a great last 2 months in the currencies. But if I could have cut out just 2 or 3 trades that were trades that didn't fit what I was trying to do, and I kind of forced the issue because I wanted to trade more than the pattern was setting up, I probably would have done a lot better, and so I'm looking to perfect my own internal trading system. And every one of us guys, we teach systems. We teach systems of trades that are based on rules and technical analysis and everything about that. But at the end of the day, we take those systems and we design our own. Because there's no one trader that is like. Steve Wong is a perfect example of that. We've had Steve on the podcast many times, but in terms of Steve's kind of process, he learned to trade multiple different trading systems, and over the course of his career as a trader, he's really kind of designed his own that is based on the rules and guidance that you sat down with him on. And it's the same thing with all of us, and Steve asks, how's it working out for me? I'm in the process of doing it, Steve, in terms of not only the things that are working, the things that aren't, but at the types of trades I want to do. Do I want to continue to do, a lot of news-based events? They're very volatile. When it hits good, but they're very volatile. Do I want that type of volatility as a trader in 2015? I love the trade, but that doesn't mean my portfolio needs it. Do I want to, I'll do the go-to-bed trade every night. I love that trade. But what type of bank opens are the best trading environments? Is it the Japanese Open? Do I want to continue to do the European Open for the go-to-bed trade? Just in terms of taking that system and really designing it around who I am. And you guys will see that come out every time we do the Forex report. because that's basically kind of what I'm doing here. I love to go to bed trade, Steve. I did it 3 times last week, 2 times the week before, because I won't do it. I won't force that trade. If I'm not up, I'm not going to do it, you know. But I did 5 times in the last 2 weeks, Steve, and I was 5 out of 5 on the trade. I had a couple base hits, but there was a couple of those trades that literally I was up 160 pips when I woke up in the morning. You know, just kind of like, oh my goodness, that is, wow.
Who wouldn't want to learn to make money when they're sleeping, Matt? I mean, the go-to-bed trade. Steve, I think that's a great goal for you. You know, and even every one of us, we need to look internally and say, okay, what can I get better at? What product can I learn to use in a better way? Is there a software tool? You know, even a lot of basic traders, Matt, they may not know how to use their Thinkorswim well enough, or how to use the MetaTrader 4. I mean, what areas do we need to improve upon, and network with the right people that can help you with that?
Yeah, well, and that's another thing, Tim, because MetaTrader 4, you know, I'm just barely learning that software. You know, just barely. I still struggle sometimes in like, all right, how do I place a target and a stop loss order on it? You know, because I just switched over to it a couple months ago. So I'm still kind of learning it, and I've probably made a good, you know, 200 trades on it already, but it's still just kind of learning that software. I've made some mistakes in it. There was one time I was trading a news-based trade, Tim, and I clicked the wrong damn button. You know, literally, I clicked the wrong button, and within 30 seconds of being in that trade, I was down 50 pips. Literally, 30 seconds into the trade, I was down 50 pips. And I was just staring at the screen going, why am I not making money? Why is that a negative? What? You know, because it did exactly what I thought I did, right? And I'm just staring at the screen, just like, because it was early in the morning. I was at an event, and I'm sitting there staring at the screen going, wait a second, what? And so I finally figured it out. I'm like, oh my goodness. And I hurried and reversed the trade. And, you know, I ended up down like just a couple $100 in the trade. But, you know, within 30 seconds, I was down 1,000.
Products too. I mean, you know, I remember, Matt, one of the very first times you ever did a butterfly, this is years and years ago on Thinkorswim, and you called me and you're like, hey, I've got max profit. How do I get out? And I'm like, because it wouldn't take you or something like that.
I remember that phone call. Yeah, it was a long time ago, but you know, as a trader, you always remember the dumb things. You know, you really don't remember like 6 months ago. You don't remember, oh my goodness, I had this trade, I had this straddle on this, it worked out, or you know, I had this go to bed trade or whatnot. You only remember the times you were an absolutely you know, idiotic, so to speak, or you made mistakes, or you had a big loss. Like, I will always, to my dying day, I will remember that ISRG trade. When ISRG pre-announced earnings, and I was in an iron condor and an SOB gapped, you know, 75 points. I was showing, you know, beyond max loss because of the bid-ask spread, and I'd sit there and stare at that sucker for everybody because it was so far out of the money I couldn't really do anything with it. But I'll remember that one till the day I die. And, you know, you don't remember all your winners and all your good ones. Although I will remember the trade I called on the Japanese yen when it was at 107. And it, you know, it was my first Forex report. And it's currently at, I think, like 121 or something like that. Some ungodly, like,
you know, some people call it that you're pounding your chest and stuff when you say, you know, I did well. But I think you should always be proud of yourself when you make a good call. You know, it's we got to build confidence. You should never be ashamed of saying, okay, I did this thing really well. I was good at that trade or that strategy, or in this month I had a great month. Because then you can focus on it and say, okay, what did I do that worked out? You know, how can I replicate?
As long as that doesn't get to the point where you're like, you know, you take it for granted, and it starts to make you not put the work in, because trading takes work. It takes hard work, and you should be proud of your work. I mean, and I'll just throw this out to the group. How many of you guys are proud at your jobs or your careers when you do good work? When you have a good negotiation, or you make money for the business, or you hit a deadline, I mean, we're all proud of that. Well, trading's our jobs, trading's our careers, and we're absolutely proud of what we do, and we're proud of the products we put out there, and we're proud of tackle trading. It doesn't mean that we're done working. I mean, because anybody who knows Tim and myself, there's nobody in the industry that will outwork us, because we believe that's our old man coming out. Our old man said, you got to go pick up that hammer and you got to swing that hammer as hard as you can. Even if you hit your thumb, you got to swing it again. And so, that's basically our entire mindset is to go outwork everybody, because this is not a get rich quick scheme. And you guys who have been here for a while now, you know that it takes time. You know that it takes hard work. You know that it takes dedication and desire. But how absolutely cool is it? I mean, how cool is it that you can go out there and do the things that you're doing today? And it doesn't mean we're perfect at it. We have our losses, but it's just awesome. It's awesome to say you trade. How many of you are just so proud that you can tell people you trade? Maybe you're not to the point you want to be at, but it's just awesome. Just say, yeah, what are you doing? I'm selling a bear call spread. Well, what's that? Well, go to Tackle Trading and check it out. It's awesome. It's awesome. And so, yeah, I am proud of that. And I think you should be proud of your work.
Absolutely. There's no doubt about it. And, one thing I want to do here, Matt, is let's have everybody load up their questions for today. We're going to be out at an hour. I've got family dinner, Christmas obligations, all that
before
stuff.
We get
I'm
into,
sure everybody else does.
Tim,
so let's have everybody load up questions in the chat.
Before we do that, let's bring on a couple people real quick. And let's bring on Eduardo. Eduardo, you got your microphone. I want to talk to you real quick because you are so ambitious at this. I mean, truly, one of the most ambitious people I've seen recently at it. Eduardo, how are you doing tonight? Let's see him check his mic. Steve will bring you on here in a second.
Anybody who has a mic that wants to use their mic, just raise your hand. It's up at the top. We can give you mic rights. If you want to come in and say Merry Christmas or tell us a joke.
Tell us a story.
Anything you want.
Whatever you want. Yeah, I like it. We like stories.
Can you guys
There's Edgardo.
Yeah, Eduardo, we got you loud and clear. How are you, buddy?
Awesome, man. Awesome, Tim. This is great. Very privileged to be here. Happy holidays. This session was awesome, as they always are. And it seems, I'm not very sure, and Tim will take this at the lab next week, but it seems to me my portfolio might just be taking a little bit of a turn because I've been sticking to, like I was telling Matt earlier, and Tim, theta. I've been sticking to theta positive trading, and all of a sudden it's like I can just concentrate on going through the chain and looking for good opportunities there, making sure that I have an automatic limit order set up to take them down when it gains a little bit of profit. I'm still battling on how much profit to get, but I've been just inching up. So I've been putting the orders through, and the system have been taking them down. I don't know if I'm making sense, and I know that if they're not there anymore, it's because I made a profit regardless of how small it was.
Yeah.
So I've been seeing that it's changing like that, and now I'm not like stressed here on what to trade. I just go through my list, keep looking for credits, and that's what I've been doing the last, I don't know if it's been maybe a week or so. It hasn't been that long, but finally I just put it. It seems like I'm putting it all together. And
that is
I'll
awesome,
keep
Eduardo.
guys.
That is awesome. A couple things kind of to talk off that real quick.
Let me jump in on this one for a second. I think it is so important to develop an identity. What Edgardo's talking about here to me is tremendous because he's saying, I'm going to become a theta positive trader. I'm going to focus on this area and become great at that, and then I'll build on it. Matt, earlier we were talking about adding this and that to our own trading businesses, but we've been doing this 10 years, you know? If you're new, sometimes the most important thing you can do is focus in on an area that you know will work and try to become great at that. And then you can build from there.
Well, I mean, when you look at the options market, you have delta, theta, vega trades, you have gamma trades, you have tons of different types of delta, theta, vega trades. It's a big market. And if you try to just jump in and just take in all of the market at once, it's very overwhelming, extremely overwhelming. And I love what Eduardo said. He said, you know what, my portfolio is taking a turn. And what he means is he's evolving. He's evolving in terms of his trading strategies. He's going to focus on, the positive theta and, to be able to place trades and put them on. Just in terms of that, and then once we master that, let's move into delta or vega type strategies, or maybe you just be a theta trader. We know amazing theta traders that's all they care about is selling options, getting cash flow, positive theta, highly conservative, credit spreads, naked puts, covered calls, those types of things. So I think what Eduardo's doing is the right thing. And I'll tell you right now, whenever I have a bad day, I might just call up Eduardo because he says awesome to us like 5 times before he says anything else. This is awesome. You guys are awesome. And I think it's going to be like an instant pick-me-up. And I just absolutely love that. So thank you very much for that, Eduardo. But obviously it takes time to perfect any trading strategies. But I'll tell you right now, out of everybody at our Google group or on the website and whatnot, Eduardo's putting the time in. And I have no doubt he's gonna get there. No doubt he's going out there. He's making posts. He's making trades. He's asking questions. He's really diving into this. 2 feet first, head first, however you want to put it. He puts on a ton of trades, and he embeds himself in this community. And I'll tell you right now, guys, that's what it takes. If you want to perfect something, it takes diving into it. It takes asking questions and getting involved in the community. And it's just amazing to see Eduardo's journey and other people's journey as well. Because we've been a part of so many people that are at the Tackle Trading website and whatnot. It's absolutely amazing to see his journey. I want to bring Steve in here. Steve, you there, buddy? I'm gonna check that mic, Steve. Oh, no, you're fine. Baby's sleeping. Listen,
Steve.
You do not wake up that baby, Steve. Just wanted to say hello more than anything else. Anyways, and Steve, not only, Merry Christmas, Steve. Not only is Steve a part of just our history, and we not only is he a colleague and friend, he's going to be joining the Tackle Trading team. And Steve, we don't just put anybody on the Tackle Trading team and teaching other people out there. So Steve in 2015, speaking of tackle trading, Steve's going to have his own show, and we'll probably make that either part of the pro version or some, but we haven't really kind of figured that out, whether it's some standalone product or part of the pro subscription. But yeah, we're going to have Steve come on here, and he's going to teach other people how to trade, his system and how he processes this, and it's amazing. I'm honored to just not only call Steve a friend, but a colleague, and that's awesome. And that's I still remember Steve coming about 4 months ago saying, now that I've gotten to this level, I really do want to teach other people how to do it. And I mean, Steve, I gotta be honest, that really kind of put me back a little bit, because that's the mindset you have to have. There's so much in life that's going to keep you down. There's so much in life that is negative. And one of the reasons I do what I do, and one of the reasons why I travel and teach other people is I believe that we all have a responsibility to help each other out. And Steve, I think it's going to be awesome. So we're gonna bring Steve part of what we're doing out there, and it's going to be absolutely awesome. Anybody who's listened to Steve talk in the past know how much quality Steve brings to the table there. So we're excited about that.
Quite frankly, Matt, that to me I'm very excited about. But that's only scratching the surface what we're doing over there at Tackle Trading.
Absolutely.
We're going to bring in other coaches, other teachers, other mentors, other products. I was talking to Noah Davidson, Coach Noah, the other day, and we were thinking about developing like a Tackle Trading top 50 stocks that we put out every month. I mean, those are the kind of things that I believe our users are going to really enjoy. One thing about getting involved with Tackle Trading at the ground level, guys, is you guys are our charter members, right? You guys are our charter members. You're the ones that we're going to stand by, and we're going to work for everybody. There's no doubt about it. But we're going to just build and build and build. If you have any requests, things that you need some help with or some advice on, or you would like to see on the site, just let us know.
Yeah, absolutely.
We got a lot of good feedback on Steve's show, and so you know what? We're going to do that more often now. I think that's awesome.
Well,
it's exciting.
And I think what Eduardo just said there, one great thing about the market is we don't compete ever. I mean, the market is big enough for all of us to be as successful as we could possibly imagine. And that's why it's important we all kind of help each other out. And if we all collectively just take a small portion of what Goldman Sachs would have made, that just makes me sleep better at night.
Matt, tell me one of your favorite Christmas stories. We can't keep this one too serious today. It is Christmas Eve after all.
All right. One of my favorite Christmas stories. I was 7 years old, and I was so excited for Santa. I mean, literally just so excited for Santa. And made Santa cookies, got Santa some milk, and our couch was up against the wall in our upstairs. And so I put the milk and the cookies out for Santa. And I went and I snuck in the back of the couch so I could see Santa. I was just so curious to see Santa Claus. And I remember hearing footsteps coming down the tile next to the fire. And the fire was just the fire. We lived out in the boonies. There was no gas out there. We coal and wood is what we had. And so I remember, the fire, feeling the heat of the fire and listening to the footsteps, and coming around the corner, I'm peeking around the back of the couch, and not to break anybody's belief in Santa Claus, but that was the moment in time that my heart was broken. And watching my father and my mother walk around that corner, putting the babies to, or putting all the presents out there, sneaking off, going back to bed. I just sat there and just bawled, just cried like a little baby.
Well, that's not the only time you cried on Christmas, then, because I
got a
remember
lump
the
of coal one time.
time
I got a lump
Mom
of
and
coal
Dad
one
thought
time.
it was funny to give you a lump of coal,
Yeah,
literally for
literally.
Christmas. So
They
what
gave
they
me a
did,
lump of
guys,
coal.
they wrapped up a lump of coal and made Matt open it up.
Yep.
And they said, you were on the naughty list. Too bad, no presents this year.
Yeah.
And he started bawling his eyes
What
out.
would you do if you were 9
like a
years
little
old?
baby.
Seriously. What would you do if you were 9 years old? You're so excited for Christmas. You think you're getting a remote-controlled car, by the way. That's what I thought I was getting. It was at Radio Shack when Radio Shack was actually a real store. And I open it up, and there's this huge lump of coal, and I've been shaking it. It's got to be this remote control car, and no, it was not a remote control car. It's a lump of coal, and I just look at everybody. I'm like, "Are you shitting?
Started crying.
It's just bawling. And my mom.
I got lots of stories of Matt crying, guys.
Yeah.
There was the time we went to
Thanks,
ET
Tim.
and you cried.
Dude, he scared me. I'm not going to. I had a traumatic 8 to 9 year old when I was 8 to 9. All of these stories were like 8 to 9 years old.
Yeah, you're just a sweet.
Listen,
young
I've
boy.
embraced
It's
it.
okay.
I still cry
You
at
just cried a lot.
Mulan.
It's all right.
When she saves China, I cry. Rudy gets a sack, I cry. Odds are, if we're watching Aliens right now, there's a moment where the music's going to be playing, and Ripley's killing some alien, and I'm probably going to cry because I just find that the bravery that Ripley has is so amazing.
80s nostalgia makes you cry too, yeah. Well, and the thing about the lump of coal story is you ended up getting that remote control car. It was just in the other room. They were just messing with you.
Yeah, I still don't like him about that one though. Rude joke. Yeah. All right, let's go ahead and let's answer some questions here. If you guys could ask Tim and myself one question, regardless what the question was, whether it's about trading, tradable instruments, management, life in general, whatever it is, go ahead and ask there in chat. We'll read them and we'll answer them. Melina's typing in something. Other people are as well. So one question, whatever that question would be.
Ravi, Milena are both typing in. We'll wait for those to come in. Yeah, and you didn't let me tell my story. I'll have to save that one for the end.
Yeah, we'll save it to the
All right,
end.
Milena. Yeah, when do you generally take profit on a straddle or strangle? Great question, Milena. I'll go ahead and take this one first.
Well, let's first identify a couple things, though, Tim.
Yep.
Okay, number one, what type of straddle strangle are we doing? Are we doing it on an economic report? Are we doing it on a anticipation of movement, or are we doing it on earnings? for earnings, specifically earnings?
Well, let's see what Milena is talking
Okay,
about
earnings.
here.
Earnings. Go ahead, Tim.
So the volatility build. So, and actually that leads into what I was going to talk about. You know, when within the options market, you have to identify the nature of the strategy beyond the title. See, a covered call is not the same each and every time. If you play at the money or out of the money, or first month or first week or 3 months, they can become dynamically different. In fact, the name of the strategy doesn't give us nearly enough information to build a set of rules or design or anything. So by refining this further and saying I want to go 6 to 8 weeks out before earnings, buy the options, this is what would fall in the area of what's called a Vega trade. And what you're really planning on doing is you're planning on playing the volatility build into earnings, which is natural and occurs each and every time. And in that situation, it's a tough deal because you're fighting time decay by going long options, hoping that the volatility build or the move into stock makes you enough money to offset the time decay. In those instances, Milena, if I get into a situation like that, I'm probably only going to go for like 15 or 20% profit. One of my, I used to subscribe to a website that would put out straddle picks, and they were really good at it. And there are people that love playing straddles like that. You know, Mike Brooks, one of my mentors, he talks about those types of strategies quite a bit. And there's nothing wrong with the strategy, but you probably need a more conservative target than what most people really recognize. And it's very deceptive. If you've ever gone in and used the risk graph tools, like in Thinkorswim or something like that, they don't necessarily paint an accurate picture. I don't want to get into that. It's way too complex for what we're talking about here. But I'd say in general, about 10 to 15%. Matt, do you have any other thing on that one?
You know, there's a lot of ways to do it. I got no problem with Tim's 10, 15, 20%. To me, though, I like to look at historicals. So it really kind of depends on, when historically volatility does level out on the trade. So let's say like you're on what is the trade again, Melina? It's MS.
Morgan Stanley, yeah.
So let's kind of look at Morgan Stanley here. I'm going to share my screen real quick. I don't know what monitor I'm looking at, so hopefully I share the right one. If it's on your
computer, it might ask you to install the add-in, so hopefully you already
No, I already did
that. All right,
that.
you're good.
Okay, so you guys can see Thinkorswim here? Okay, so here, Melina, basically we're looking at Morgan Stanley here. So earnings isn't until right here, so we still got about 3 weeks before earnings. Volatility has already started to decrease on earnings here. And so historically, volatility doesn't stop until right before earnings. You see how it kind of peaks out right before earnings on this one every time. So if from a volatile perspective, you should see volatility start to inch its way up, which will aid the trade. However, if you're looking at the technicals here, just in terms of this movement here, where do you expect the stock to go for, or like in the next week to a week and a half? If you expect the stock to continue to go up, you can stay in the trade. If you expect that stock to come back down to the mean, you're going to give up that 15%. And so let me ask you a question. Do you expect the stock to continue to run, or do you expect it to come back down?
Which while she types is a very important question, because Melina, one thing that you can do with these trades is you can actually unwind them. Now, I would only recommend doing that if you've got a lot of experience with a specific
close the
strategy.
call, keep the put type thing, and you can turn that 15% return
on the call, yeah.
Yeah, that's not
exactly.
bad. What I would say, if your expectation is that it's going to retrace, I would pull the trade, because the reason you're up 15% right now, think about it. It's not based on Vega. Okay, it's not because Vega, it's Delta. Vega's been coming down. It's based on Delta, which means if it comes back down, you're going to give up that profit. And Delta is the most powerful Greek. So on something like here, I'd say, you know what? Let's take the gain on it. It's 15%, and maybe. And Tim's right. Maybe if we expect a little bit of a retracement, maybe we keep that put option. But again, I would only do that if you're very, very good technically, number one, but just directional, because that's your short-term option. If you take into account another stock, for example, like GMCR here, GMCR, if you look at the historicals, just let me kind of pan out here.
And by the way, Matt,
Okay.
while you're loading that up, I want to paint the picture for those who are listening back on the replay
Yeah.
for the Trading Justice podcast. We've got some live participants here because we
Absolutely.
tweeted it out, we put it on Facebook, we put it in the clubhouse at tackletrading.com that we were doing the podcast. So if you're ever involved in those social media platforms, keep an eye out because we do these kind of things every now and then. And so
Well, and
13
honestly-
people, 15, we had 15 at one point, came in to join us live. And Melena's here with us, and Merry Christmas, Melena. And she's asking us a question about this, and so we're looking at it on the screen right now.
Yeah, and that's
So anyway,
probably
walk us through
something,
GMCR, Matt.
That's something we'll do more often, guys, is do live podcast, in terms of, because we're doing them anyways, we might as well bring people on for it. And plus we love doing them. So here's looking at GMCR here. GMCR's pattern's really different. Remember on Morgan Stanley, volatility peaked out right before earnings. Well, on something like GMCR, look where volatility peaks out. It peaks out about 3 weeks before earnings every time. 3 weeks, 3 weeks. And so can you see how this pattern on GMCR is different than the pattern we were seeing on Morgan Stanley? Well, because of that, I'm not going to hold into that last 2 weeks. I'm not going to do it. So on something like GMCR, we have earnings on the 4th, which means I'm going to close my straddle, which I have a straddle on GMCR right now. I'm going to close that trade, somewhere around mid to third week in January, depending on when I hit resistance or support. Does that make sense?
Well, yeah, and the final thought I'd throw in here, Melena, is that I love the strategy. If you're listening back or you're in class right now and you don't know what a straddle or strangle are, it's a pretty simple approach to playing earnings in the volatility build. Maybe we can do there's probably an options 201 question, Matt. I'm doing the options 101 over there right now in the blog series. Maybe in the next set of 201 series I'll get into that.
Yeah.
But here's the thing the last thought I'd throw in on this one. You can't really have a specific date in mind in terms of when to take profit. If it goes all the way up until 2 days before sometimes like in this one, you're 3 weeks before, you need to be pretty fluid with that because you catch your directional moves on straddles and strangles kind of unexpectedly.
Yeah.
So you gotta lock it in.
No, I
say,
agree with that 100%. I agree with that 100%.
Yeah.
You have to manage the trade. Like on the GMCR and the other straddle strangles I have right now, I'm not really managing them because it's still too early in what I'm trying to do with them. But every stock is different, every trade is different, and you never see when it happens. You never see when volatility is done. Like for example, here you're looking at volatility. It's like, oh my goodness, it's going up, 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 and then you move on, and then finally you're like, oh my, okay, now it's kind of leveled out. And so you got to manage it at the time. And on the Vega trades like straddle strangle, you not only manage Vega, you manage Delta as well. And so what you said right there, the takeaway, if Delta gives you the profit, take it, which is managing Delta. Otherwise, watch for that Vega to max out, and that will vary depending on whether on the stock itself. So absolutely. Let's see.
Love it. And then Ravi had a great question. Kiplinger's latest issue says we're in the middle of a 10-year bull run. It's mentioned on almost every other page. I wonder what they're smoking, or could they be right? Matt, you want to take this one
Yeah,
first?
I'll take this one. Everybody has an opinion, right? Could they be right? Maybe. Who knows? I don't know. I don't have a crystal ball. I know as a trader, I don't care. Whether it stays bullish, whether it goes bearish. As it stays bullish, I'm gonna be a buyer. As long as those trends stay bullish, I'm primarily a buyer. Doesn't mean I'm not shorting stock out there. I'm just shorting stocks in downtrends. Do I think they're right? No, I don't. But I also don't care. And that's the greatest thing about being a trader is Kiplinger and people who follow Kiplinger, they have to be right. The way we trade, how we trade, we don't care. We sell credit spreads. We trade Vegas strategies. We short stocks in bull markets because they're going down. There's a lot of opportunity to make a lot of money on oil the last 6 months as it was going down, despite the market going up. There's still opportunity there. So I don't care if Kiplinger is right because I don't care if I'm right. Once again, I don't think we're in the middle of a 10-year bull market. That doesn't historically happen. Even in the dot-com market, where they called that a 10-year bull market, the vast majority of that bull market went 5.5 years, from the beginning of January 95 until the summer of 2000. And so they called that a 10-year cycle, but I didn't, the vast majority happened 5.5 years. There was 3 years in that market from 92 to 95 where you were basically completely and utterly sideways. There was a couple years in the early 90s where you were bearish. So, whether Kiplinger's right or not, I honestly don't care. I think they're wrong, though. And the reason I do is because I think the market has to price in when interest rates go up. And I don't think the market can drive up that much when interest rates are going up. That doesn't mean the market crashes, guys. I mean, you got to realize a lot of these long-term investors, when markets go sideways, guess what they call them? They call them bull markets. So when Kiplinger says we're in the middle of a 10-year bull market, he doesn't take into account 10, 20% corrections, because what those are just bull markets. He doesn't take into account 2 to 3 year sideways actions, because he just calls that a bull market. So he doesn't take into account corrections in the market, which can go up to 20%. And so, like the 20% correction in 2011, that doesn't count as a bear cycle. Bear cycles, according to Kiplinger and the other traditionalists, have to go 20 to 50%. So it's just looking at things a little differently.
Next question comes from Edgardo again, and if you're in the chat, if you're in here live with the Trading Justice podcast, please pop in a question. We'd be happy to chat about it. We got a few minutes left. Edgardo asks, will they be able to hold interest rising till 2016 or even 2017? Edgardo, I'll take this one. I think when you say they, you mean the U.S. and the Federal Reserve and the FOMC. From the U.S. economy
Everybody
standpoint,
knows
money
who they
supply
means.
here. I don't think they can. I mean, I know they've kicked this can down the road for years and years and years and years. I think what they'll do is they'll slowly dip their toe in the water, try to create a positive interest rate in the U.S. from holding the currency, and see how it goes. Mm-hmm. But I'll tell you this, Edgardo, if it doesn't go well, I guarantee they'll just change course. They've committed to being willing to manipulate the economy in the bulls and Wall Street's favor to whatever ends they have to. It's a very interesting dynamic to watch.
You mind if I have a different take on that one, Tim?
Go ahead.
I don't think they're going to dip their toes. I think they're going to rapidly increase rates so that they have ammunition to decrease rates as the market goes down. So that basically they'll start getting into negative after that. But I think they will. Now, when I say that, guys, they're not going to raise it like the Russians did from 11% to 17%. That's not. I'm talking about raising it from 0 to 1.5.
1.5.
Yeah, something
into
like
that market.
Yeah, something in those ranges.
Edgardo, another thing that needs to be said here, Matt, a rising interest rate does not necessarily equal a crashing market.
No, it does not.
Okay? Not at all. That may not be the implication here. In fact, if they believed it would crash the market, they wouldn't do it.
Yeah, that might not.
They're trying to create strength in the U.S. dollar right now, which is an interesting new dynamic. I got to tell you, it's going to be fascinating to watch these currency markets in 2015.
Honestly, Tim, from a currency standpoint, I don't think they want a strong U.S. dollar. The Fed has stated many times they don't want a strong U.S. dollar. I just think they don't have a choice. I think they have to embrace it. Yeah, they have to embrace it because the emerging market currencies are so weak. And so, you don't know if it's going to be interest rates that are the catalyst. It could be something completely that's not even on the radar right now. 6 months ago, was oil crashing on the radar? No, I mean, it wasn't even on the radar. So do we know what's going to be on the radar in 6 months from now that could be the catalyst for the next bear market? I don't know. Could it be interest? Sure, it could, but we just don't know what it's going to be. All I know is the market did not go up as fast as last year, and that means we have slowing momentum. Let's see. When it crashes, Eduardo, will they do QE again? Simple answer, absolutely.
They'd be willing to. I don't know if they would or not, but I know they're willing to.
If they need it.
They're willing to do whatever they have to.
Yeah, if they need it. They will kill the U.S. dollar if they have to. Milena,
Matt, I got a hard out. I
know you
I
do.
have a
Let's-
family Christmas dinner.
Two more questions.
that
Two more
I
questions.
Can't be late to.
Two more questions. Are you doing
All right.
any bear positions on biotech since the sector got hit? Meaning, like, who was it? The stock that didn't get the hepatitis. What was that stock? Yeah, Gilead. I'm looking to short. Remember last time biotech got hit? Biotech got hit about 4 months ago, and it was a quick crash. Biotech is very, very aggressive, extremely aggressive. Hedge funds drive biotech a lot. They're called growth stocks. And I am looking to short out there. I don't currently have a trade though, so I missed the initial movement. I'm waiting for the next movement. Let's see.
There's a lot of good candidates out there too.
Yeah.
I went through it. We went through it on the coaches show just the other day.
Well-
Celgene broke down. It's got a little double topping pattern.
They all did.
It's
It-
a more aggressive one, but yeah. And here's the thing: whether it's biotech or whether it's something else next week or something else in 3 weeks, Milena, what you did there was very smart. Use the news to help generate your watch list and go out and do your scans based on what's happening. There's the old saying, trade what you see, and that's part of it. You open up, you see that the oil markets are bearish, go find something bearish in the oil markets. Don't make this stuff too complicated.
Yeah, Gilead. If I get a doji at $100, Melina, that's put options all the way on for me. So
All right, I'm telling my story whether you want me to.
all right. Let's tell
I'll
Tim's
make it
story.
quick. This was the first time I met my
I thought you were gonna
wife's
say I
grandma and
wet
grandpa. It
bed.
was
I was
about
like,
12
wow.
years ago, and it was the exact same Christmas dinner party that I'm going to right now. They do it every Christmas Eve, and I walk into Grandpa's house, and he comes over and shakes my hand, and he leans into me real close, and he says, I can break your wrist right now. I knew I'd get along with these guys real well. They are just, some blue collar nice guys. He was half joking, but
I don't think he was. I don't think he was at all. I think he was threatening you.
I took it that way, and I respected it. But yeah, that's right. That's right.
Well, guys,
Matt, play us out with a song.
Yeah, I will. We got 2 songs we're going to play out. You can stick around listening to them, or you can just listen to them on the playback when we get the podcast out later on today. But before I put us out there, guys, just honestly, I said this on the coaches show, but just an absolutely from the bottom of my heart, thank you so much for being a part of everything we're trying to do out there. And, it's without the people that are listening and downloading the podcast, subscribing to it, going to the website, our dream of creating this could not be fulfilled. And so truly a wonderful, wonderful thank you to all of you who help us make this a reality. And 2015, I'm sure we're going to have an absolutely amazing year for all of us. So I'm very excited about that. We'll have more podcasts coming out later on next week. This will probably be our last one for this week, but we will have some next week. So check those out. And if you like the podcast, everybody, go ahead, go to iTunes, give it a nice 5-star rating, and help us push that out there even more. We're going to go out because it's Christmas Eve. Merry Christmas, Happy New Year's to everybody out there. Happy holidays, and we'll see you next podcast.
You've been listening to the Trading Justice Podcast. If you've enjoyed yourself and think that the conversations and topics we've covered are important, help spread the word. Give us your feedback. 5 stars on iTunes, like us on Facebook, and follow us on Twitter. The Trading Justice Podcast is proudly sponsored by TackleTrading.com. Get off the sidelines and get in the game.